Welcome to Investors Insights, episode 150. We're thrilled to have you with us here today. We have a lot of topics to talk about, and as always, before we get started, we'd like to emphasize that if you like what we have to say, let us know. If you don't like what we have to say, we know you'll let us know, and that's what we love. We love the debate, the interaction. And on that note, we're going to be talking about how your portfolio is impacted by what's going on in the presidential election, what's going on in terms of oil prices, what's taking place with the European Union and Great Britain, all these and others. So stay tuned with us, and we appreciate your participation.
You're listening to Investors Insights with President and CEO Greg Powell and the Portfolio Strategy Team at 5 Plan Partners. 3, 2.
Guys, great meeting this morning. You threw some good things out there. I liked the debate and discussion. We've got a lot of viewers here talking about the volatility of the market. And last week, the media came out and said, hey, this is the best rally we've had in some time. Now, that's what we're dealing with in terms of a bear market, because we believe we're in a bear market. True?
Right, true, we do.
All right, so what happens in a bear market here? Let our viewers know.
Well, we usually have short and big rallies.
Right.
So a couple of day rallies. Last week, we rallied with oil at the beginning of the week, and then it fell down a little bit at the end of the week. And so it's hard to get a sustained rally in what we think is a bear market right now. So,
right, and also in bear markets, you often see, when you're coming out of a bear market, you see much more supported rallies, more up, up volume.
Sustainable.
Yes, sustainable and more up volume to down volume. We're seeing these big percentage rallies, but not big in terms of the up trades versus down trades. You like to see at least several 9-to-1 up days typically when you're coming out of a bear, and we're not seeing that.
And a lot of that, when you say, is on rumor.
It is.
Yeah, it's rumor that OPEC and Russia are talking, they're going to cut back production, but there's no verification that any of that's going to take place. The other thing we need to tell you is we just don't see oil prices going up anytime soon. Is that correct?
It's too much supply.
No sustainable upswing. It's all these rumors and quick jumps.
Right. There's desperate countries out there wanting that to happen because they need the revenue, but the reality is it's just not happening. Trey, you brought up a good point in the early morning meeting about Great Britain and the European Union. Talk about that for just a minute.
So this really isn't front page news in terms of markets right now, but it will be down the road. Great Britain set a vote on whether or not to stay in the European Union for June 23rd. Now, this is big because it just would impact our markets, and that the fear of them leaving the European Union would just kind of rile bond markets. It's already impacting negatively currency markets this morning. The pound is trading much lower. And then over the weekend, London's mayor came out in support of exiting the euro. And so that's something we want to watch before it becomes front page news. Come late May, early June, it'll start being a big news event, and we want to be prepared for that. So just start watching.
And everybody's watching the European Union recovery, the economics over there. They're watching that very closely.
It's very fragile, if even existing.
Right. And then on the presidential elections, we had primaries in South Carolina, Nevada over the weekend. Hillary Clinton won Nevada, Trump, South Carolina. So we're starting to see that narrow down as to who could be the possible candidates. And that should also help get more dialogue, more focused on the markets.
Yeah, right, exactly. Yeah, the more narrow the list gets, the more deep people get into the candidates' policies or plans, and that's when you start seeing that impact the market. With so many candidates, it's hard for the market to react to one candidate's plan versus another. But once you get fewer candidates, we will see more volatility probably.
Right, and on that note, Bobby, you brought up in the early morning meeting, I think we've got a lot of Fed governors talking this week.
We got another busy week on tap for us. A lot of Fed governors are speaking throughout the week. Today we've got manufacturing numbers coming out. Tomorrow we have consumer confidence that's been rising lately, which is good.
That's good.
Then also existing home sales and home prices. The 30-year mortgage rates have actually ticked down a little bit to around 3.8%, down from around 4%. So that's important. And then new home sales on Wednesday. Thursday, we have jobless claims. Claims have been lowering, which is good. And then a big report on durable good orders on Thursday.
Okay.
We're watching that carefully. Yeah. Friday, we've got the revised GDP number, supposed to be revised downwards from where it was. And then also personal income, which has been picking up. And so a busy week.
Yeah, so we've got a lot of data coming out. We're going to have presidential candidates making comments. We're going to have Fed governors making comments. Plus, then we've just got to look at the overall economics. But in summation, we still believe we're in a bear market. We're still staying conservative and defensive, and we're going to keep you updated as we get through this. So thanks for joining us, and we look forward to talking to you some more, hearing from you. Thanks.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.